1700. Okay. Depreciation on machinery and vehicles would be 42 and 16. Yes. Then you have taken wages and salaries. That is 41300. Interest paid is 400. Office expenses 4900. Okay. Yes, and so you have missed one expense, and you have also missed. Wait, you missed this. Yes. So, Zen, you have missed two things in this, and I would like you to figure out what they are. I will tell you one thing. One of that is an expense, and one of that is an income. Then you there?
Yes, sir. I'm trying to find it.
Yeah. Please try to find it. One of them is an expense that you have missed, and one of them is an income. Zen, any close to figuring it out?
Yes, sir. But I'm like trying to find it. 1 second.
Sure.
Sir, investment income
Yes, good. The income that you have missed is investment income. Where would that go? Where would you write investment income?
below gross profit because it's other income.
Absolutely right. It will come under gross profit and you will add it and your gross profit will become 88. Gross profit plus investment income will become 88,500. Good. And what about an expense that you have missed?
Sir, don't know.
You don't know?
No, sir.
So look at the top of the table then. The first thing in the table.
So advertisement.
Yes. So you missed advertisement expense.
So, sir, if this happens in the exam, how much they will give you marks, or it will be a question wrong?
No, so 1 mark will be for each of these line items, right?
Yes.
For gross profit, obviously, if they ask you to calculate, if they give it to you like this, then it will be just 1 mark for gross profit. Otherwise, they will ask you to calculate. If they ask you to calculate gross profit, then it would be 5 to 6 marks. Otherwise, each line item directly without any working, this is just 1 mark for each line item. So you would, if you had done this question, you would have missed out on 2 marks. If it was for
Okay,
like
sir.
8 marks, you would have gotten 6.
Okay, sir.
But there's nothing to miss here, right? If you focus properly, you should have not missed these two things.
Okay, sir. Sir, I thought because in the like we wrote in the format, it's written these all stuff.
It's written, sorry, what?
In the format that we wrote last class, it is written rent, wages, carriage, outward, discount, allowed, utilities, electricity, these all stuff.
Yeah. Remember, Zen, that is not an exhaustive list.
Okay,
Expenses can be anything.
okay,
But advertising, please do write it in that format. It is a very, very commonly occurring expense.
okay,
Whenever
sir.
anything seems like an expense to you, always write that advertising is an expense.
Okay, sir.
Yeah, we can never make an exhaustive list because for every industry, expenses are different. You don't need to get into that right now. You will learn that in the bachelor's level maybe. But the point is that one uniform list cannot be made. So you have to figure out. But advertising, it is a very common expense. So don't worry about that.
Okay, sir.
Okay. Okay, so now let's move on to statement of financial position because that is the other most important statement after the income statement in when it comes to financial statements. So statement of financial position, or it is also called balance sheet. Now remember Zen, in the first few classes we must have done the accounting equation,
Yes, sir.
right? What is the accounting equation? Do you remember?
Sir, assets equals to capital plus liability.
Yes, S is equal to, let's just write it as liabilities plus capital. Okay. All right. So this accounting equation is written in a horizontal way. When we write this in a vertical way, we get our balance sheet. It is that simple. So the format of the balance sheet is assets. You write all your assets, and the total of your assets will be written like this: total assets. And once you have the total amount for the assets, then underneath that you write your liabilities or whatever they may be. Then you write your capital, whatever that may be. You add these two things up and you arrive at an amount. This total assets amount must always equal this total liabilities plus total capital amount. All right. So this is what essentially we're going to show in any balance sheet. Does this make sense?
Yes, sir.
Okay. So this was a very broad view. Now let's get into the things which comprise our assets, our liabilities, and our capital. Okay, so a lot of revision from the first class will happen here. We remember assets are okay. So whenever we're making for assets, we know that anything that the business owns which may bring future economic benefit, that would be an asset. Now assets have two kinds. The first one is the current assets. The second one is the non-current current assets. So the current assets have a life of less than 1 year, and non-current assets have a life of greater than 1 year. Now, some of the major current assets include inventory, account receivables, cash at hand, cash at bank. But also this is not an exhaustive list. There can be others, and we will come across others when we do practice. But
Okay, sir.
essentially, these four things will almost always be in your current asset side of the balance sheet. All right.
Okay, sir.
Okay. So when it comes to non-current assets, again, they are divided into two main types. The first type is the intangible non-current assets, and the next type is tangible non-current assets. Now, the intangible non-current assets are basically assets which have no physical substance. Some examples may include copyrights or goodwill, etc. Okay, and the tangible assets are non-current assets have a physical. They are basically physical assets, and the examples will include all what we've done so far, like buildings, like vehicles, like plant and machinery, like equipment, and so on. All right, is there any confusion in what is in front of the screen right now? Anything out of these? Yes, and you said something?
Sir, no, I understood, sir.
Okay, very good. All right. So this is all about assets. Let's talk about the liability section now. So liabilities also follow the same trend. Liabilities are divided into current liabilities and non-current liabilities. Current liabilities are the ones which have to be paid within 1 year, less than 1 year, and non-current liabilities have to be paid after at least 1 year, more than 1 year. Now, some of the major liabilities, current liabilities, include bank overdraft, they may include accounts, payables, and etc. Or they at times may also include any short-term bank loan which has a time to maturity of less than 1 year. It will be given to you in the question. If they tell you that the short-term bank loan has to be repaid in 2 years, which is obviously greater than 1 year, you write that in non-current liabilities. If they tell you it has to be repaid in 5 months, 6 months, 11 months, even 1 year. If it is up until 1 year, it will come under current liabilities. All right.
Okay, sir.
Yeah, and for non-current liabilities, usually you get either debentures or you get a bank loan. If bank loan is written and there is nothing written other than that, you always assume it to be a non-current liability. All right. So any confusions here, Zen?
Understood.
And you also have the idea of what a debenture is?
Sir, it's like a share that we that has no power.
No, 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 no. So that those are preference shares, shares which have no voting power, no, or no control
Okay.
over the business. So debentures. Okay, so this requires us to get into finance, which I won't be getting into, but just to give you an idea. So whenever companies, wait, this is just a side knowledge sort of thing for you. Whenever companies have to raise financing, right, have to raise money for anything, they have two options. They can either do equity raising or they can raise money through debt. Whenever it comes to equity, they have options like ordinary share issue. They can issue ordinary shares which have all the control, or they can issue preference shares. These are the most common. So there are many other options as well when it comes to equity funding. And then there is debt funding. And when it comes to debt funding, they can either go for bank loans, or there are so many other options here when it comes to debt. And one of those options is debentures. But bank loan are the loans which the companies take from banks, right? That is why they're called bank loans. Debentures are basically what company give to piece of paper that a company gives to either government or private people like you and I, private individuals, and instead they pay them back money. They pay them money, and for that money, the company, for the debentures, the company has to pay interest on them to the people who bought the debentures. So it is basically a form of debt. Does that make sense?
Sir, it's like a bond, but the company gives a
A-
bond to a person or a
Absolutely.
government.
Absolutely. It is a bond. Just think of it as a bond, okay? Don't get into details, but
Okay,
think of
sir.
it as a bond. Okay, perfect. Okay, so no confusions in assets or liabilities, or non-current assets or non-current liabilities, right?
No, no, sir.
Okay, very good. Now, okay. Yes, so let's just, I think we should be doing, okay. Okay, right. Let's do the format, the complete format of the statement of financial position. Now, yeah, that would be very helpful. And then I would again expect you to do a few examples on your own then.
Okay, sir.
Because yeah, this chapter is pretty easy. When it comes to adjustment, it does get a little confusing, which we will do, I think, in the next class. But primarily, this chapter you should be able to do. Let's go through the format, all right?
Okay, sir.
Okay. So let's say any company X, Y, Z Corp statement of financial position as at 31st December 2022. Okay. So then the first thing that you need to understand is, again, this will be three columns.
Okay, sir.
This is like third column, the second column, and the first column. Okay. Again, these columns, like the income statement columns, these are for ease of calculation, right? But the first thing that we write in the statement of financial position are the non-current assets. And for non-current assets, these column mean a little different. Okay. After non-current assets, it is just for calculation purposes. All right. But before, for non-current assets, these mean a little different. What we do for non-current assets is the first column is your cost column. The second column is your provision for depreciation column. And the third column is your net book value column. All right, just for non-current assets. For other everything else, it is just the same as for income statement for calculations, for ease of calculations. All right. So for non-current assets, let's say you have two non-current assets. You have plant and machinery, and you have let's call buildings. Yes, so if, and you can have many other, but just for the sake of an example, and we'll also use some amounts as well here, so that I can show you how total assets will equal total liabilities and total equity. This is also in your book, this whole thing, and you can go through it later on. So let's say the cost of the plant machinery, the historical cost, the cost at which you bought was 130,000. And for your buildings, it was 23,000. The total cost, you just write the total underneath, 153,000. After that, you go and you check your accumulated depreciation or your provision for depreciation account, and you find out that the plant and machinery, so far we have depreciated a total of 10,000 pounds. And for buildings, we have depreciated a total of 13,000 pounds. So this total becomes 23,000 pounds. And the net book value, which is historical cost minus accumulated depreciation, comes out to be 130,000 minus 110,000, 120,000. 23,000 minus 13,000 is 10,000. And the total would become 130,000. All right. So this is the value. This 130,000 is actually the value that we're interested in. Anyway, so this was the difficult thing done. Not difficult, the different thing actually. Once this is done, we move on to the current assets. For current assets, we will have inventory, we will have account or trade receivables, and we will have cash at bank, and we will have cash in hand. Okay. And the amounts used, so these are 15,6. Okay, so inventory, let's say we write these in the second column, 15,000. Receivables, let's say, are 6,000. Cash at bank, let's say, is 3,000. Cash in hand, let's say, is 1,000, right? Write all this, total all this, we get 25,000. We add this 25,000 and this 130,000. And we arrive at 155,000. We put double lines underneath, and over here we give it the heading of total assets. So this is the asset portion of your statement of financial position. Are we clear so far, Zen? Any confusion?
Yes, sir. Sir, understood. Properly.
Okay. Okay, very good. Now, once this is done, then we give the heading of liabilities. In fact, let's do it the other way. Capital and liabilities. For capital and liabilities, the first thing that you need to do is talk about capital. So in capital section of the balance sheet, then we take the opening capital. Opening capital means the capital which was there with you at the start of the year. All right. So you
Okay,
take that
sir.
capital. For example, there was 90,000 in our example. Then whatever profit that you have made this year basically goes back into your capital. So you will add any profit which is generated for the year. And then where will you get this profit from?
Sales.
From the income statement, not from
Okay,
sales.
sir.
From the income statement, the last thing that we get is the profit when we subtract all the expenses.
Okay,
That
sir.
profit will be added to the opening capital in the balance sheet. All right. Let's say it was 50,000. And finally, we will deduct drawings. From this, which in our example is 15,000, we end up with 125,000. And this 125,000 is basically your closing capital. Right. So once this is done, then the capital section is basically done. We add into the capital section our non-current liabilities. In our example, we have an 8%.
Sir, so we have to
Yes.
add the capital and liability together.
Yes. Remember the equation? What was the equation? Assets is
Uh,
equal to liabilities plus capital. Right? So we have the total assets here, this amount, total assets, right? And now we
yes,
will
sir.
add capital and liabilities together, and we need to be sure that we get to the $155,000 amount. All right, so capital and liabilities will be added together. Clear then?
Yes, sir.
Okay, so the 8% bank loan, the worth of that is 10,000. And then we will add the current liabilities. Within current liabilities, we have accounts payables, and we have other payables. The amounts for these are 18,500, and then we have 1,500. This would become 20,000. And then if we add 125,000 plus 10,000 plus 20,000, we will get 155,000. So this 155,000 is our total liabilities and capital. See, then this total liabilities figure and the total assets figure is equal to each other.
Okay, sir.
This means the words that we use are, this means the balance sheet or the statement of financial position, balance sheet or statement of financial position as balanced. Okay, if you are able to achieve this in your exams, and then you can be sure that you can be 95% sure that you have done the question correctly if your balance sheet is balancing at the end of the question.
Okay, sir.
Yeah, so Any have you written the format down? This is also in your book as well on page 110.
Sir, written.
So any confusions then in anything whatsoever?
No, sir.
Can you tell me in the non-current liability section, why is this 8% written behind bank loan?
Not minusing it with anything else.
Sorry?
Because we are not minusing with anything else. If it was to be minused with some other thing, we will have written it in the second row, minus it with this that we have to minus with, and we will put the total in the third row.
No, 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 no. So the bank loan, whenever you come across bank loans, right? 90% of the times you will always have a percentage written behind that. For example, it is 8% or 10% or 5% or 4%. So that this is actually a way of writing bank loans. What this is telling us is basically whatever loan we took, we are paying 8% interest on that. It
Okay,
is
sir.
basically a way to write the bank loan and the interest charge on the bank loan. All right.
Sir, will
So
it show
8%.
the bank
Yeah,
how
yeah.
much is the percentage, or we have to find the total amount?
No, 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 no. In the balance, the percentage of interest paid, right? The interest paid amounts in, where would we write it? In the income statement or the balance sheet?
In the income statement.
In the income statement. Interest paid is an expense. It will go in the income statement. So what we will basically do is we make the income statement first. You will have all the information related to interest and loan in the income statement. So what you will do is you will take this amount of 10,000, which the bank loan is, you will multiply it by 8%, and the how much will it be? It will be 800. Yeah, so 800 of expense will go as interest paid in your income statement section of expenses section of income statement, and the bank, so in the balance sheet, you will write the whole principal amount, which is 10,000. It has nothing to do with interest.
Okay, sir.
Right. Perfect. So this is what this is. Now then you will have wait, where is it? So if you go on page number 108 of your book,
Yes, sir.
there is an activity number 7.
Yes, sir.
Right. Can you please try solving it and please let me know what your answers are for that?
Okay,
You
sir.
can tell me, or you don't have to write everything. Just tell me. The motor
Okay, sir.
vehicle would be this or whatever.
Sir, motor vehicle is non-current assets.
Okay, good.
Cash is current asset.
Yes.
Good for resale are current assets.
Okay, what other name do we use for goods for resale?
Uh, I don't know.
Inve- Inventory. Inventory is
Inventory.
what we call goods for resale. Yes.
Okay.
Inventory or
Amount due.
stock.
Okay, sir.
Yes. Okay, next.
Amount due by customers. Current assets.
Okay, and amount due to suppliers.
Current liability.
Yeah, so those are amount due to suppliers, basically your accounts payables, account amounts due to customers from customers, yeah,
Account
by customers.
receivables.
Yes, those are accounts receivable. Okay, good. Next.
Rent outstanding are current liabilities
Why?
because rent has to be paid within a year.
Within a year or within that accounting period, if there is some rent outstanding, outstanding means rent which you have not paid,
Yes, sir.
right? So you are
Yes.
liable to pay it, so that would be a liability, a current
Okay.
liability. Good.
Bank overdraft, current liability.
Yes, very good. And office
Office
furniture?
furniture, non-current assets.
Absolutely. Perfectly done. And also then, same way, try doing the activity number 8.
Identify the assets from the list below. State the assets are current or non-current. Inventory are current.
Mhm.
Money owed to suppliers are not an asset.
It's not a very good. It's not an asset, but what sort of liability is it? Current or non-current?
Current.
Very good. Next.
Computer equipment, non-current assets.
Yes.
Money outstanding for goods sold, uh, account receivables is a current asset.
Very good. Very good. Now the next question. Question number eight. Sorry. Number two. Uh, Activity eight. Question number two.
Focus. Identify the liabilities, give the natures. A loan due to pay repaid to loan incorporation in 4 months, current liability.
Good. Why current
Money
liability?
because it has to be paid in 4 months.
Very good. Very good. Next.
Money owed to suppliers, current liabilities.
Yes.
Fixtures and fittings, current is an expense.
No, no. Think about this one. Fixtures and
Current
fittings.
liability
Why?
because it has to be fixed during the accounting period.
Fixtures and fittings are basically things and like for example if you have a room and you have a cupboard fixed somewhere, so that is your fixture and fitting. And you have a fan or an AC in your room, that would come under fixtures and fittings. So now
Okay,
tell
sir.
me, what would that be? Fixtures and fittings.
Non-current liabilities.
Non-current assets.
Oh, non-current
these are
assets.
these are these are assets, these are not liabilities. Fixtures and
Okay.
fittings are always assets. Yes.
Money outstanding for goods sold by us. Account receivables. It's
Yes.
a current asset.
Yes.
A loan due to be repaid in 3 years. Non-current liability.
Yes.
Where due to pay to HMRS is current liability
Why?
because taxes has to be paid during that accounting period.
Yeah, so I will get to this later. What about G? Tell me what G would be, the next last one.
Current liability.
A bank overdraft, obviously, it is a current liability. Good. So the thing about taxes, what happens then is that we never pay the tax in the current accounting period.
Okay,
See,
sir.
the reason for that is the reason is that when see until December 31st, for example, if the accounting period is, let's keep it very simple. For example, the accounting period is from 1st January to 31st December. Okay. So up until 31st December, every single transaction would come under this accounting period, right? If we're making a sale on 31st December itself, it should come under this accounting period, right?
Yes.
Right. So, for example, after the closing done on 31st December, only then can you and I, the accountants of our company, can set and prepare the financial statements. Because if we do it before 31st December, the period is not over. Does it make
Yes.
sense? So this whole process of creation of accounting statements and closing these statements takes about 1.5 or 2 months after the period has closed. And
So
once
we
we have,
file it next year.
yes, yes, yes. So what happens is when we have made the accounting statements, then we call the external auditors. They come and they check our accounting statements, and once all of that is done, only then we can file our tax. So the tax will actually for this year will actually be paid next year, but it will
Okay,
be
sir.
paid next year. We cannot extend it beyond that. So because it will be paid next year, which is obviously less than 1 year, that is why we write it as a current liability.
Okay, sir.
Right. So okay. So this is all right. Now then, the next activity. Uh, you can. What do we have after that? Today runs a business, doing lunches at people's places of work. She borrowed 30 grand for her business on this. Loan will be paid in 4 years, but the interest is 8%. She's also financed by a credit loan. 4 years, interest is 7%, and payable the business purchase goods for easily. The amount is prepared on this. Show the total amount of current liabilities at 31st December 2019. Assume no payments have been made during 31st December 2019. Okay, so this is a very good question. Uh, All
Sir,
right, but
activity 12.
activity number 10.
Okay, sir.
Then what I would highly suggest you is that because we are running out of time,
Yes, sir.
I would suggest you to do activity number 10. Try to do activity number 10 because our next 3, 4, 5 classes we are going to focus on income statement and balance sheet
Okay.
itself. Even in the chapters which are coming after this, right? The adjustment chapter, all of this is related to income statement and balance sheet. So I
Okay,
would
sir.
suggest that you do activity number 9. It would take you like 3 minutes. Activity number 9. You do that. You do activity number 10. As we have one whole week in front of us, and then you try to look at and see where was that? I saw it somewhere. Prepare the activity number 12. You can write it somewhere then. Activity number 9, 10, 12, and sorry, leave activity number 12. Do activity number 9, 10, and 30.
Sir.
All right, then please try to do it. And if you don't have time, leave activity number 9 and 10, but do activity number 13. And
Okay, sir.
also please complete every single question in the checkpoint portion, which is on page number
Okay, sir.
114,
Okay,
right?
sir.
So that we're
Okay.
done with this. In the next class, I will try to complete this exam case study question. In the
Okay,
class,
sir.
we will try to do it, and then we can move on to the next chapter in Sunday's class.
Okay, sir.
All right. Suzanne, any questions, any confusions in anything, please let me know, or we can wrap
No,
up.
sir. No questions.
Okay, okay. Great then see you next Saturday. I will let you know. I told you, right? The class may be moved ahead by 1 hour or 1.5 hour.
Yes,
Only
sir.
for Saturday. For Sunday, it will
Okay,
be on
sir.
the same time.
Okay, sir.
All right. Thank you so much for joining, Zan.
Okay, sir. Assalamu alaikum.
Walaikum salam.